In 2008, the United States created trillions of dollars almost out of thin air. In 2020, it did it again. Even more. And instead of collapsing, the system kept running. No wheelbarrows of cash. No overnight currency crash. No national bankruptcy. Now try that in Argentina. Or Zimbabwe. Or Turkey. Different ending. So what makes the US different? Why can America print money on a massive scale without instantly destroying its own economy, while others can't? To understand this, we need to stop thinking about printing money as a physical act. The Federal Reserve doesn't fire up a giant printer and flood the streets with cash. It mostly creates digital dollars. Numbers on screens. Bank reserves. Balance sheet entries. Here's what actually happens. When the U.S. government spends more than it collects in taxes, it issues Treasury bonds. IOUs. Investors, banks, pension funds, and foreign governments buy them. If demand slows, the Federal Reserve steps in. It creates new digital dollars and uses them to buy those bonds. This is called quantitative easing. Translation: the Fed swaps newly created dollars for government debt. The government gets funding. The banking system gets liquidity. Markets stay calm. On paper, it sounds almost too easy. But here's the hidden engine that makes it possible. The US dollar is the world's reserve currency. Oil is priced in dollars. Global trade is settled in dollars. Central banks store dollars as savings. When a country like Japan or Saudi Arabia runs a trade surplus with the US, they end up holding dollars. What do they do with them? They buy US Treasury bonds. So when America prints money, the world absorbs it. That's the privilege. Other countries don't have that luxury. If a smaller economy prints aggressively, investors panic. Their currency weakens. Imports get expensive. Inflation explodes. Citizens rush to convert savings into dollars or euros. Capital flees. But when the US expands its money supply, global demand for dollars often rises at the same time. Especially during crises. In 2008 and 2020, investors actually rushed into US assets while the Fed was printing. It's almost ironic. The house is adding water to the system, and the world still wants more water from that house. But here's where it gets uncomfortable. Printing money doesn't mean there are no consequences. Inflation doesn't always show up immediately in grocery prices. Sometimes it inflates asset prices first. Stocks surge. Real estate climbs. Tech valuations stretch. The new money enters financial markets before it trickles into everyday spending. If you own assets, you feel wealthier. If you live paycheck to paycheck, prices eventually catch up. That's the quiet redistribution. Now let's talk about the math. U.S. federal debt has crossed $34 trillion. Servicing that debt depends heavily on interest rates. When rates are low, the burden feels manageable. When rates rise, the cost compounds fast. If the Fed prints too much for too long, inflation expectations shift. Foreign buyers demand higher yields. The dollar weakens. Confidence erodes. And confidence is the real foundation here. Not gold. Not oil. Trust. Trust that U.S. institutions will honor debts. Trust that inflation won't spiral. Trust that the dollar remains the safest option in a chaotic world. As long as that trust holds, the system bends without breaking. But reserve currency status isn't a law of nature. It's a position earned through decades of economic dominance, military power, deep capital markets, and political stability. History shows reserve currencies change. The British pound once ruled global trade. It doesn't anymore. So can the US print money without collapsing? For now, yes. Because the world is structurally tied to the dollar. Because global demand soaks up the supply. Because alternatives are weaker. But the privilege has limits. If debt grows faster than economic output. If political gridlock erodes credibility. If inflation becomes persistent instead of temporary. Then the equation shifts. The real question isn't whether the US can print money. It's how long the world will keep agreeing that those dollars are worth holding. And that answer depends less on printers, and more on trust. If you like the video, please subscribe to the channel.